market movers. This is The Pulse with Francine Lacqua.
Now, UBS has announced a $3 billion buyback alongside what analysts are describing as a mixed set of results. Now, fourth quarter net income of $1.2 billion beat expectations, but inflows at its key wealth management unit slumped. Well, I've been speaking with the chief executive, Sergio Ermotti.
The market is still, broadly constructive. If you look at the economic outlook, if you look at the investments that are going through in the economies, particularly in the US, in the areas of technology, infrastructure, energy, and it's going to be quite constructive for the economy, and therefore we see markets, broadly speaking, holding up well. But the level of asset prices is pretty high. It's very difficult to find areas of undervaluations, and the geopolitical and macroeconomic uncertainties are creating the volatility we saw so far in the last 4 weeks. I mean, we were not short of news and surprises. So I would say that it's a continuation of what we saw in the last few years. And this is something that I'm pretty convinced we're going to have to live with also in the next decade or so.
To this kind of extent, we're Wednesday. I think Monday we had a big metals sell-off. Yesterday we had a big software sell-off. Does it readjust, or is it just volatility, name of the game?
It's a readjustment, but look, when you look at, for example, in the tech sector, I think it's quite clear there are pockets of excess in terms of valuations. I personally, I believe that the impact of technology and AI to our society, to our business, is going to be very profound. And I wouldn't say that the market is overvaluating that. But from a financial standpoint of view, I do believe that there is some reconciliations to be done, at very least, in terms of timing. How long it takes to realize economic value out of all this innovation, and of course you're going to have winners and losers out of this. Out of this process.
When you talk about a profound transformation, is that also for the banking sector, and how quickly could that come with AI or some of the software models? Like, how do you look at it?
I think yes. I don't think there is any industry that won't be touched by AI, directly or indirectly. Our business is a very process. We manage a lot of data. We have a lot of processes, and we will benefit not only in terms of efficiency but also effectiveness. So the accuracy of what we do, I'm pretty convinced, will increase. Now, it's going to take a few years to play out. So there is always an exaggeration on how fast people believe things are going to happen versus an underestimation on how deep it will change. So, for example, we see in the next 3 to 5 years clearly a significant impact on our operating model and our efficiencies.
Mm-hmm. When you look at geopolitics, I mean, there's everything actually. There's all of these dislocations or changing. Is it changing client behavior in certain regions?
Well, there is definitely, but this is something that has been going on for the last 2 or 3 years now. I would say that diversification from a geopolitical standpoint of view, not only in our business, not only on how people invest, but also where they book their assets. I mean, this is one of the reasons why, as the only truly global wealth manager, we are benefiting out of these trends, because people are moving geographically, are much more fungible, and they want also to create different, have the ability to have booking centers that are giving diversification while keeping a coherent and consistent service level. So, but this is one of the reasons you saw the big rally on commodities in precious metals. You saw emerging markets outperforming lately, because there is a desire to diversify.
Are your clients moving away from U.S. assets?
I wouldn't say that people are moving away, but I would say income or probably new income coming from dividend or interest is probably deployed in a different way. So I wouldn't talk about people moving away or dropping or selling assets, but it's rather using excess liquidity to diversify.
What's your take on, we have a new Fed chair nomination. Does that take away some of the volatility?
I think that's appointing a person that had already an experience at the Fed is well recognized in the market and has a very solid credential, has brought back the discussions into the right in the right terms. I think that the appointment, in my point of view, reflects the administration desire to make clear that the stability of the system and stability of the dollar as a reserve currency should be guaranteed also going forward.
So you're stepping down in 2027. Who are you looking? What kind of replacement are you looking for?
Well, I mean, first of all, I think that people keeps confusing when we say that I will stay at least until the early part of 27 doesn't mean I'm going to step down. Having said that, our succession process is something that we have been working on from day one when I rejoined. It's something that I care a lot about in making sure that we have a good set of internal candidates that can be presented to the board, and then I'm sure the board will also evaluate external people and come to the right decision when it will happen.
So it's not a done deal? You could stay on as CEO beyond April 27?
Right now, we are all focused. Myself, my team, and the board. We are very focused on executing and finalizing the integration. Now, we are making very good progress. We are almost there, but we haven't finished. So we cannot be distracted, and we're not going to let this discussion be led by external factors, but we stay focused in control.
I know, but you have quite a personality in Switzerland, so people are, of course there's speculation what you do next. Your own chairman said you'd be a great chairman after him.
Well, Colum is always very generous, but I think that right now I'm very focused on doing my job, and then I will see what's next.
Talk to me about capital requirements. Is there any progress with authorities on the way forward?
No, there is no news other than what we saw in the last few weeks before year-end and also coming into the new year. There is more debate, of course, in Switzerland. The parliament and the political landscape is mobilizing and trying to understand what's going on. I think we welcome that interest, and it's very important that people fully understand what it means. And so we are confident that the process will result in a reasonable outcome.
UBS was looking potentially at moving headquarters to the US. Is that still on the table? Is it something that's being talked about in corridors?
We always say that our preferred options by far is to stay and operate out of Switzerland, and there is a lot of speculations. We keep hearing that kind of stories. We keep hearing statements like we are threatening to leave the country, which is absolutely inappropriate and not true. But we're going to stay focused on what we want. We want the best for UBS, for our people, our 30,000 plus people in Switzerland, for the Swiss economy, and we'll not going to let us being distracted by these noises.
Well, that was Sergio Ermotti, the chief executive of UBS, speaking with me a little bit earlier. Now, U.S. futures pretty steady today. We did see a bit of a sell-off triggered by new AI automation tool from Anthropic, sparking fears for the software sector. Markets in Europe following Asia's lead and looking past some of these concerns. But let's take the broader picture. Let's get more on this with Wolf von Rotberg, equity strategist at Safra, Sarasin. Wolf, thank you so much for joining us. What a market, what a week we've had. I mean, it's gone up, it's down, it's metals, now it's AI software. Like, what do you think is fundamentally priced into these markets?
Well, I mean, in general, I guess market pricing is fairly rich. So we've started a year at valuations in the US where we were at the beginning of last year. They've touched kind of a glass ceiling at around 22.5 times 12-month forward earnings, which makes it just very difficult to push higher unless you see earnings coming through, earnings being upgraded. And I think that's the reason why we see these bouts of volatility coming through, market selling off in different segments on pretty kind of, let's say, smaller bits of news. while at the same time the underlying macro backdrop remains in place, is fairly strong. But
when you see some of these corrections, or I mean, is it correction? Because then you often have a bounce back straight afterwards. So are they warranted, or again, is it a little bit of underlying panic?
Well, I think there's always, let's say both elements matter. So there's definitely some element of panic in a way, like what we've seen over the past, let's say 48 hours reminds me very much of the DeepSeek moment at the beginning of 2025. There's a bit of news coming through, and kind of the market is indiscriminately selling off a specific sector because it's pricing basically this bit of news into pretty much every company in the sector. But then, there is probably some reassessment over the coming days in which the market will say, look, which companies are actually being affected by what we've just heard. So both of this, it may not just go back to the same levels which we've seen before, but definitely some of the, let's say, names and individual stocks which have sold off will likely see a bit of a recovery here.
So what do you worry about? I know we had a good conversation with Sergio Ermotti, and I asked him a little bit about the volatility. He says, look, we'll probably have to get used to it, but at the same time, there's a kind of readjustment because of the timeline in which some of these technologies, for example, take hold.
Yeah.
What kind of readjustment do you see?
Yeah, definitely. I mean, the market is starting to price, let's say, implementation, adoption, implementation, and is trying to find where will AI be the most disruptive, and will it be, will it happen within companies which are being traded in specific sectors, or will it happen outside these companies, and are these companies being disrupted away, let's say? And I think this is kind of, what will concern us over the coming year or so.
But does it warrant like a 10% sell-off in software, right? Because Anthropic has a model that says, look, this is going to be a concern in the future. Are we going to have every couple of months
probably
kind of like big drop?
Probably not across the sector. Because if I look at the companies, obviously there are some companies in the software sector where I'd say, like, look, these are purely services providers. They don't have any proprietary data. They're not like deeply ingrained into the, let's say, workings of a company, something like that. Yeah. Their moat is very shallow. Yeah. So these companies will probably be the most affected by AI. They may be disrupted away in a sense. Yeah? Others, though, which have also sold off over the past few days, which are owning proprietary data, which are kind of very unlikely to just disappear because AI is coming in. They may even benefit from it, using it. They should not have sold off to this extent. Yeah? So the 10% basically across the sector is probably unjustified. For some companies, though, it still is.
When you look at, for example, some of the healthcare, so we're going to speak to the Novo Nordisk chief executive. I mean, they got slammed because there's concerns about pricing in the US, GLP-1, and they actually, guided to the lower side. Are we, again, is this a sector-wide concern? Do you look at sectors, or do you really look at individual companies for underlying earning strength?
Yeah, I mean, Novo Nordisk is definitely a special case because it's very specific for the company, and what Novo Nordisk is losing, other healthcare names are gaining, let's say, because they're losing market share. The product is not as much of a monopolistic product as it used to be. For the sector in general, we are quite positive, but from a structural point of view, we were very positive from a technical point of view mid last year because we said like the political risks in the US won't materialize to the extent which was put forward by the president. Hasn't happened. Sector re-rated, still trading a bit cheap on relative valuations, but longer term structurally, I think apart from all the demographic arguments and what have you, this is a sector which will be heavily disrupted by AI, but in a positive sense that a lot of companies will manage to apply it. Yeah? And this is happening from drug development to diagnostics to medtech appliances and so forth. So there's a lot of stuff, I think, across the value chain in healthcare where AI will help the companies in the sector, but also everyone else outside the sector, basically all of us, more or less, making healthcare more efficient and making it better.
So how do you pick the quality, basically not overvalued companies out there?
You would probably go for the ones which which have a, let's say, a strong pipeline on the pharma side, but then the ones also which have a product which is unrelated to AI, let's say, but is still cannot, which, like, let's say they own the space, they have a moat, they have a product, they have some sort of monopoly and can attach AI to it to make it better. That's, I think, the part of the sector which will benefit the most.
And do you see it now, or do you need to wait? Again, the models are also constantly changing. So do you need to wait 12 months? Is there a worry that some companies overspend now and then actually there's a much better model that's game-changing in a year or two?
On the AI side in general, you mean?
Well, or the AI that some of the companies that you like are using.
Yeah,
it's
no,
double-edged.
Yeah. No, I think, the healthcare sector has done very well in the second half of 2025. It's re-rated quite sharply. Again, there's been a lot of optimism. I think the consensus has really moved towards a very preferential view on the sector. As such, I think for us, it's a structural call. I think the long-term let's say, components for healthcare to work in a diversified portfolio are very much in place. This has to do with AI adoption. But it also has to do with record high margins. This has to do with profitability and so forth. So it's a very high quality sector, which if it basically manages to attach AI to its product, it will benefit. But this is more like a longer term structural call from where we are right now.
Wolf, thank you so much for joining us. Wolf von Rotberg, equity strategist at Safra Sarasin, joining us today from the Zurich office. Now, coming up, shares in Novo Nordisk slump after it warned that obesity drug price wars will have a big impact on sales this year. We'll be speaking to the chief executive next, and this is Bloomberg. The conversations that matter, the insights you need. This is the Pulse, and I'm Francine Lacqua here in Zurich. Now, shares of Novo Nordisk plummeting this morning after it warned that sales will fall as much as 13% this year because of intensifying price wars in the obesity drug market. Huge demand for its blockbuster weight loss drugs Ozempic and Wegovy saw Novo become Europe's most valuable company. But now it faces multiple headwinds, including growing competition and the expiry of Ozempic's patent. Well, I'm delighted to be joined by the chief executive, Mike Doustdar. Mike, thank you for joining us. If you look at the share price, it really is getting slammed. What's your message to investors today?
I would say that for the last 6-7 months, we have been speaking to the investors, trying to explain that in order to expand market, and we need to expand market in our business, we need to reduce the prices. So we increase affordability. Of course, it was well publicized that in the US, the prices from a very high level were coming down within the GLP-1. Our company is quite concentrated compared to many other pharma companies within the GLP-1 segment. So when you, of course, get a pricing headwind on your GLP-1 products, Wegovy and Ozempic, you feel the pressure of that more. But also on the back of course, being a focused company and being the best in what we do, we feel very confident that the volume buildup will happen script by script, and we have seen the early signals of that with our Wegovy pill launch. So I'm very hopeful that while we're disappointing the investors today on a short-term price decrease, they will be quite happy to see that we will be able to obtain a lot of gain from the volumes that entails within diabetes and obesity.
So you're basically saying, look, trust us until this happens, right? Until the volume uptake makes up for the price decreases. When? Is it this year? Give us a timeline of when you think you'll see that turn.
I think what most people would recognize with diabetes and obesity, this is a condition that unfortunately affects billions of people. Close to 2 billion people have diabetes, obesity, and overweight. Everyone also knows that together with our competitor, we are only treating some 20 million of these billions of people. Everyone notices that GLP-1 market as a segment is growing, and we have been able to actually show that we can take part of that growth. This year we'll be growing once again, and we'll be producing more than ever before, treating more patients than ever before. But of course, when your base gets repriced in United States and US is some 55% of our business, you will basically see the headwind and the results of that within 2026. I am much more hopeful as we pass through this period that the volumes will compensate for the price decrease that you've seen.
I mean, given where we are now, can you rule out another round of layoffs?
We don't have any plans of mass layoffs, but I also tell our own employees as well as the external world that we are readjusting our business as we go forward. And as a result of that, in pockets of the company, we will be hiring more. I think right now, currently, we have some 400 open positions. But there are other parts of the business where we are reducing our capabilities. So that's business as usual. What you saw last year with 9,000 employee cuts is not in the plan for 2026. And as long as we grow and make make more patients into our products, come into our products, then of course it's more of an upside than a downside when it comes to headcounts.
And this would be for the whole year, so you're basically ruling that off even if the uptake in volumes could take longer than expected.
I am right now looking at the first early signs of volume uptake. That's our Wegovy pill that after 4 weeks has been given to 170,000 individuals. If you put that in the context, that's 2 times more than tirzepatide did in their first month of launch, or 15 times more than when we brought Wegovy injectable. When I see volume uptakes like that, I get encouraged about the longer-term future.
Do you worry that the oral Wegovy could cannibalize the Wegovy injection?
The early signals are that some 88% of the patients that are coming into Wegovy pill are buying the lowest dose, the 1.5 milligram of the product. That's a very strong signal to us that these are new patients and not those who are coming from the injectable ones. There could be some small cannibalizations, people who need, to take a pill instead of an injection. But I would say a lot of people have been waiting to use GLP-1s, but injectable was not the path they wanted to take. Wegovy pill gives them the same efficacy as the injectable Wegovy at 16.6% weight loss. So we're seeing a very good uptake of these new people coming in.
Do you feel confident that Novo can compete in the long term, in the long run, without a monthly obesity shot?
Absolutely. First of all, we do have monthly products in our pipeline, and we will share and show that in due course. But more importantly, I feel that Novo Nordisk, by being a focused company, probably has the best pipeline right now in the industry. And we also have manufacturing skills second to none. 2 things that many of the new players coming into this market sometimes underestimate. And then we have the commercial capabilities, and we are very quickly learning how to mass product these GLP-1s via our partners. So I feel very confident for the building blocks that Novo Nordisk is building the future.
Mike, I know there's a lot of hope for CagriSema. How confident are you that you'll get the right trials? I think we're expecting something quite soon on that. And how easy would it be then, if you do get the right approvals and the trials go well, to scale it up?
So we have filed for approval, and we hope to get that approval later on this year. That would make the CagriSema launch early next year, and perhaps the first amylin molecule, combined molecule, that will hit the market. So once again, testament to Novo Nordisk innovation powerhouse that it is within this area. It's a fantastic drug that I'm looking very much forward to, with the highest efficacy than any other product today marketed. So that's, of course, incredibly exciting. And more to that, we will try to make that the best launch again, only surpassing what we've done now with the Wegovy pill.
Okay, thank you so much for your time today. I hope to do it in person very soon. Mike Doustdar there, the chief executive of Novo Nordisk. Now, coming up, analysts warn of a software apocalypse as Anthropic releases a new AI tool that threatens the sector. We'll have plenty more on that next, and this is Bloomberg. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in Zurich, and these are your top stories. UBS announces a $3 billion buyback after better-than-expected fourth-quarter profit, but its key wealth management unit disappoints. Novo Nordisk slumps after warning that sales this year will fall sharply. The chief executive tells us he expects volumes to make up for falling prices. Plus, shares in software companies plummet on concerns that a new AI tool from Anthropic will make them obsolete. Now, the EU plans to offer the US a partnership to develop a strategic roadmap on critical minerals aimed at reducing Chinese dependency. Proposals will explore joint projects, price support mechanisms, and build secure supply chains whilst respecting territorial integrity. Well, joining us now is Yu Zhi, a senior research fellow on the China and Asia Pacific program at Chatham House. Zhi, thank you so much for joining us. When you look at actually what was announced yesterday, I mean, how does this change, the trade framework between Europe, China, and the US? Can every party find what they need in it?
Thank you, Francine, for having me. Not necessarily. I think we're now in this very sticky stage that, on the one hand, Donald Trump would like to meet Xi Jinping and have an in-depth discussion on a range of topics in April, and of course, including the critical mineral and export control. And whereas, on the other hand, I think there has been increasing trade frictions between China and European Union. So I think three parties have their different wants. But overall, I think what China is intend to do is to use this export control towards rare earth as the way to spook both United States and Europe, and particularly for Europe, because European Union continue to have this so-called China containment strategy. So I think that's where we are.
Where do you think actually the relationship between the US and China is? Because we did see an escalation. Actually, China, I think, one of the only countries to retaliate with some of these critical minerals last year. But it does feel like they're on a better footing. I mean, two presidents will talk. It seems like the relationship is much better than it was 8 months ago.
Well, I think let me use the term of the so-called low intensity engagement, but also low intensity competition for now, I think up until April, because President Trump wants to make sure that his trip towards China will be a success. So he will try to do whatever he can so far to quiet the so-called China hawk within the administration for now. But however, what might happen after late April, and we don't know at this stage. I think overall what Trump also realizes is because of the various export control that China imposing upon on US companies, and also because of China's technology edge, and we're now in that mutually destructive phase of both powers. So no one is a winner in here.
I mean, it's true that, these rare earths are not that rare. It's just that China, as you say, is exceptionally good at processing them. What role does the EU have in this?
Well, I think for EU is that if they would like to increase its industrial capacity, whether it's on processing or whether it's on looking for the alternative sources, and they will have to speed up the entire process. And however, as I said, because of processing of rare earth would have to lead into a worsening of environmental standard. Now, whether European Union will be able to, on the one hand, advocating for the extremely high environmental standard for the ordinary people's living, whereas on the other hand, and also pursue on this critical mineral processing. And then I think that's the balance you have to join it out. But I think overall for now, European Union tried very hard and very tough towards China, but it seems to be nowhere in that very kind of stalemate between Beijing and Brussels and various capitals of European countries.
Yeah, and I remember, I guess it's just quite difficult because Europe is stuck in this place of trying to have a partnership with the US so it doesn't invade Greenland. I guess that's part of the equation, but they also need a lot of the critical minerals from themselves. So how do they think about that going forward?
Well, they could think about this forward in a much longer term. And however, I think they probably would need to get their act together to act quickly if they would like to sustain the level of supply in terms of critical minerals they would need it for its own industry. I think for now, one is the temporary issue they will have to deal with in terms of the shortage of supply. But whereas on the other hand, it's also about longer term capabilities and whether they'll be able to build up within themselves.
How do you see actually, China's tech companies? How advanced are? I know at the moment a lot of them are still reliant on some of the Nvidia chips, but at some point, is China tech going to be much better than the US?
I think for now, what we have is certain pockets of industries that China is already jump ahead of the US companies. And whereas I think on the finest and the chips that China is still somehow lag behind 3 to 5 years. But given the amount of talents they have, and given the cheaper energy price they have, and also given the amount of data that is available within the market, that Beijing is able to catch up pretty quickly. So yes, we do seem to have this very magnificent US tech companies. But I think on the other hand, those Chinese companies and names a little bit unknown should not really be ignored. And I think on top of that, the Chinese government also offer a very clear signal, which will be indicated in the upcoming 5 years plan published in March next month. And that's to say that featuring on the so-called future industries, including AI, including low-level sky economies and so on and so forth, all those so-called future industries, to be part of the way and drive the Chinese economy. So I think that's overall, the jury's out on US and China in terms of tech competition. And there's no clear winner so far, but on certain pockets, China has already won the tech race.
I mean, I was going to say, you know, it was only a year ago, maybe a year ago, in like 3 weeks, that DeepSeek really took the market by surprise. Are there any pockets of Chinese tech that we should be really paying attention to?
Well, I think as I said, AI, but also the quantum computing on certain companies, and also given the amount of young people that is available to producing those technologies, we should be really look into. So I think quantum computing would be another sector or should pay careful attention to.
Brilliant. Thank you so much, Yuji there, a senior research fellow at Chatham House. Now, a new AI automation tool from Anthropic has sparked a $285 billion sell-off in stocks. Traders dumped software shares on fears about the destruction that AI could cause. Now, for more on all of this, we're joined by Matt Bloxham from Bloomberg Intelligence. Matt, I mean, look, behind the sell-off is basically this idea that Anthropic released a model that can do a lot of the stuff cheaper, but the sell-off was so massive. I mean, even a lot of the private equity firms were not discriminated against. So, how do you see? What do you think the underlying cause of the sell-off is?
Yeah, I mean, I think it reflects this kind of broader uncertainty, really, about how AI is going to affect different parts of the economy. And whereas, last year was perhaps, just kind of maybe investing a little bit blindly, perhaps, in the whole space, we're now seeing a greater discernment amongst investors about trying to pass the winners from the losers. And there seems to be a disproportionate focus at the moment on identifying who the winners are. And you could perhaps argue that it's becoming a little bit kind of broad brush. And, it's kind of sell first, ask questions later. So it does seem like a pretty aggressive sell-off, and I think if you look at some of the names that were really affected yesterday, companies like RELX, that's a kind of big established provider of legal services, and the specific incremental product from Anthropic relates specifically to kind of legal profession, but obviously saw a big sell-off in things like the advertising agencies too, because they're kind of more broadly exposed to the kind of AI threat, even though Publicis, which reported yesterday, delivered better than expected Q4 results and delivered a pretty optimistic and robust outlook for 2026. So, it's a risk-off trade, I think, with anything that's remotely related with AI software.
Fair enough. Meanwhile, Nvidia is nearing a deal to pour more money into OpenAI. So what's the latest on that?
Yeah, so obviously Nvidia originally put some money in to OpenAI, I think in 2024, and then not so long ago they announced with great fanfare this big $100 billion investment plan, which was one of the big triggers of this whole kind of circularity theme that we got caught up in. But since then, there hasn't really been a huge amount of progress made on signing that deal, and so I think there was some speculation, perhaps on both sides. People were kind of rethinking the wisdom of that plan. So I think to some degree, this $20 billion planned investment is an effort to, kind of reassure people that, the broad ambition of that partnership is still intact. Maybe the $100 billion might be evolving a bit, but that there is a commitment there between both sides. But even since they announced that deal, Nvidia's been investing in multiple large language platforms, and OpenAI has been working with a range of GPU providers. So both of them are kind of diversifying their kind of supply chains.
Matt, AMD given an underwhelming sales forecast. So what was missing for investors?
Yeah, I think what was missing there was really the kind of the scale of the upgraded outlook. I think that the kind of quarterly results in terms of revenues were better than expected. The kind of outlook for the next quarter was a bit better than expected, but not quite enough better. People were looking for a beat and raise anyway, and I think they were looking for something a bit more. Obviously, the kind of angle here with AMD is that whilst they've been late on the AI processor, AI accelerator trade, they are catching up, and I think people are looking for that momentum to accelerate a bit quicker than it has done. But the company remains confident that by 2027 they can generate tens of billions of dollars from AI accelerators. For the year just finished, it was about $6 or $7 billion. So that they still see a significant increase in their opportunity in that market.
Matt, thanks so much. Matt Bloxham, their technology analyst at Bloomberg Intelligence. Now, Bloomberg LP, the parent company of Bloomberg News, competes with London Stock Exchange Group and Thomson Reuters in providing financial data and news. Bloomberg Law also sells legal research tools and software. Now, the German chip maker Infineon says it will ramp up spending on its technology for data centers, aiming to grow revenue as demand for artificial intelligence solutions picks up speed. Sven Schneider, the chief financial officer of Infineon, has been speaking with Bloomberg's Guy Johnson.
We came in slightly out of expectations, top line, bottom line. Now, for the full year, yes, as of today, we reiterate our full year guidance we have given in November, being moderate growth and also on the profitability level, high teens and low 40s. Given that the demand situation in certain end markets is improving, but given that there are still huge uncertainties, we believe it's the right balance and the right guidance as of today. Of course, you're asking, is there some conservatism in it? I would point out at the underlying automotive numbers we are taking for our guidance. They are a little bit below street expectations.
Okay, let's talk about where that uncertainty comes in. You talk about uncertainty. You talk about AI demand being very dynamic. Is that where the uncertainty is? Dynamic would seem to imply it's not very predictable.
Yeah, so if we take the company and put it's very simplistic into two parts, non-AI and AI. I would say on the non-AI side, we see, as I said, some pickup in demand. For example, in the 3 Cs, communications, compute. We see here that there is clearly the beginning of an upturn. Whereas on automotive and industrial, these segments seem to have really achieved the trough and are beyond the trough, but the demand still has not really inflected. That's where we see the uncertainties. On the AI side, it is the opposite. The AI, which for us, just to repeat it, it's not the AI chips, it's powering AI from grid to core. That's where we see tremendous growth potential. It's going up quarter after quarter. It's for us the biggest growth driver in the history of the company. And that's why for this fiscal year, we are reiterating the $1.5 billion revenue number, which is double of last year. And we're even saying that for 27, we are again growing now from 1.5 to 2.5 billion because of this huge demand. And in order to do that, we are pulling in investments in our fab in Dresden, which we are going to open in summer. So that's a very positive development across the world.
You sound fairly confident on what that story is going to deliver for the business and the investment you're making around it. Others in the industry are voicing some caution. The TSMC CEO the other day saying what he sees in terms of the data center build out, the AI story, is making him, quote, nervous. How confident are you in what you see in terms of the AI demand picture?
Yeah, so this is a question, of course, we are getting very often. So fears about an AI bubble, as some people call it. Our view is we do not see that for the next years. Why? Because on the one hand, for us, and here we always need to look at the differences because we are talking about the power side and not the chips themselves. We are working together with a very broad international customer base of leading processor makers and hyperscalers. So very strong partners, making lots of money with that business, with other business, so very profitable. It's not a niche business for them. It's the core technology platform they are developing. And a very important other element is there is more and more also state support coming to the AI business, given that countries have declared that they want to become self-independent and self-sufficient on that area. So that's why we believe it's a very strong development, not only for 26, not 27, but for the next years.
Guy Johnson there speaking with Sven Schneider, the Chief Financial Officer at Infineon. Coming up, Bitcoin gives up all of the gains made since President Trump's election win. We'll explore why next, and this is Bloomberg. The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in Zurich. Now, almost $500 billion has been wiped off cryptocurrencies in less than a week as a sell-off led by Bitcoin actually accelerated. The largest cryptocurrency fell to its lowest level since President Trump won re-election. Let's get more from Sven Ram, cross-asset strategist at Bloomberg MLive. Sven, as always, good to speak to you. So Michael Burry has warned of a death spiral. Is he right?
Morning, Francine. Great to be talking to you. I think I'm certainly coming down on the side of Michael Burry. I do think that, the 40% decline that we have seen from October thereabouts suggests that, look, I mean, what exactly is Bitcoin? Is it a store of wealth? Is it digital gold? Is it an inflation hedge? It has failed all three of those tests in that 40% decline. So those are legitimate questions to ask. And the problem with Bitcoin falling to 75K now and still struggling to find support, Francine, is that no one can point to an intrinsic value for Bitcoin and say this is the level at which it gets below cost, below production costs or whatever, and nobody can point that out. And therefore, it begs the question that what is its value? Where is it deriving its value from? Of course, the blockchain technology is very useful and has value, but that doesn't mean that Bitcoin has got the fundamental value riding on it. So we'll see how the speculative froth winds down.
Meanwhile, gold's back above $5,000 is the only way up now.
Well, it does look like in the short term, Francine, I think that, it can claw its way back to $6,000 an ounce, because if you look at what happened in October, we saw a flash crash where it dropped about 10% in the space of a week. And then we saw it go all the way back to 5,600 an ounce. So it's pulled back now, but it's coming back up again after the 2-day fall. So let's see how far it goes. But I think that, given the momentum it has had and the short-term enthusiasm for retail investors to buy the dip, I think they may chase it all the way higher to $6,000 an ounce. But what happens thereafter is the question. The chart that you're showing there shows, what is the future price of gold based on inflation inputs in the US, and its current price of $5,000, around $5,000 an ounce, suggests that it's already priced in $2033, $34 even. So it is already trading as though we are in 2033 and 2034, and that exuberance is like getting ahead of the market getting ahead of itself. I don't think it's sustainable beyond the short term. So the short answer to your question is we may get to $6,000 an ounce, but after that it's going to tread water for a long time.
Sven, thank you so much, as always. Sven Ram there, Bloomberg MLive cross-asset strategist. Now, the chief executive of Galaxy Digital says he believes the crypto market may be nearing a bottom. Speaking exclusively with Bloomberg, Mike Novogratz also told us what he thinks could turn sentiment around.
It's immature. We had a huge run-up from where people bought it at 50, 100, 1,000, 2,000, 10,000, all the way to 100, 130,000. And I think what ended up happening was people finally started taking profits. After we crossed 100, it felt like the community had won. And it was that sigh of relief, like we did it. We created this amazing ecosystem, this amazing asset. And there's been kind of like a seller's virus that got into the market. People blamed it on quantum. I don't think quantum in the long run is really the reason. I think there was selling, and that selling is getting, executed in the market. There was buying, sure, lots of new institutions are coming in, but prices are set on the margin and there have been more sellers than buyers. I think we're getting close to the bottom, but we'll see. You always know a bottom after you see it. Yeah. And listen, there's a couple things that could help, right? Market structure bill passing would be a big deal. You know, people are really pessimistic on it right now. Okay. I actually am a little more optimistic that things get done because I think both sides want it done, but we'll see.
So what is the catalyst that turns the tide right now? You mentioned a market structure bill. Maybe that will bring some optimism, but I don't know, is there anything else that could turn around this trade?
Yeah, listen, part of this acceleration recently downwards is the thought that Kevin Warsh is going to be very hawkish. Listen, what I think Kevin did is he took out the tail risks for inflation, right? He's a man of integrity. He has worked alongside Stan Druckenmiller for a long time, literally since he left the Fed. And so you don't think he's going to do whatever Trump wants him to do. That said, he's pretty dovish right now. And I think once he gets in and starts talking, you know, looking at the environment that we see today, he wants rates lower. And I think once that market kind of rewrites him as a dove, at least a dove, given the current environment, that also could help.
That was Mike Novogratz, Chief Executive of Galaxy Digital, speaking exclusively with Bloomberg's Tim Stenovec. Now, Russia's latest assaults of missiles and drones has crippled Ukraine's energy system amid frozen winter temperatures. Ukrainian President Volodymyr Zelensky has said the work of his team negotiating with Russia will be adjusted accordingly ahead of trilateral talks in the UAE. Now, for more, we're joined by Greg Sullivan, Bloomberg's Russia economics and government editor. Thank you for joining us. Greg, are we expecting any progress from the talks today in light of these recent attacks?
Well, it's hard to say. We are expecting the talks to continue today and tomorrow here in Abu Dhabi. In one sense, it is notable that the two sides are sitting down face to face after talks last month. What progress, if any, that has been made is unclear. There's not a lot that is known. We do know that they plan to discuss technical parameters around, military parameters around what would happen if there was a ceasefire. But to get to a ceasefire still remains quite distant, knowing that the biggest issue, Moscow's demands for territory in the east, remain unresolved. Of course, we've heard from the Ukrainian side, from Ukrainian officials, that they expect to alter their approach to the negotiations, given the recent attacks, which casts doubt on what progress can actually be made. That being said, the talks are going forward, so we will have to wait and see what comes out of them.
Greg, do we expect any pressure from the U.S. on Russia after this?
Well, we've heard from the White House a couple times since the recent attacks. The White House did say that Trump was unsurprised, and he later expressed some dissatisfaction. We've heard from the U.S. lawmakers that they have prepared sanctions. However, European officials have recently said that there's little sign that they're ready to implement them. And in the past, Trump has been somewhat hesitant to impose new sanctions or punishments on Russia, given its intransigence in the talks. That said, they have imposed sanctions on some of Russia's biggest oil producers, which has had an effect. But it's unclear whether they're ready to take the next step at this juncture in imposing more pressure on Russia.
So what obstacles remain, and is there any sign of compromise on these?
Well, one of the biggest obstacles that remains is a Moscow demand for territory in Ukraine's east that Kiev still controls militarily and Russia has not been able to seize. Kiev has said that it's not ready to seize sovereignty over territory. It's heavily fortified land that would have potential security consequences were they to give it up, let alone political consequences. However, Moscow has shown no sign of backing away from those demands. There are other issues such as the size of Ukraine's military and security demands that don't appear to be wrapped up between the two sides. So it's unclear whether progress will be made there.
Greg, thanks so much. Greg Sullivan, Bloomberg's Russia economy and government editor. Now, we have a special coverage of the Bank of England's first interest rate decision of the year. That's tomorrow. Joining us by the news conference by Governor Bailey at 12:30 p.m. This is Bloomberg.